Good afternoon, everybody, and welcome to this week's weekly market analysis, the 3rd of April 2017. Everybody just take note that we have changed times in terms of daylight savings is now finished, so we're now in Australian Eastern Standard Time. Alright, so before I do get started, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, so let me have a quick look at what's happened in the week that's just gone by, and we'll have a look at what's happening this week. It's actually quite a filled week. You can see there my calendar of important data that's due to be released. Of course, those times that you're seeing is in my local time, which is 3:30 in the afternoon in Sydney right now. I believe the whole east coast of Australia is on the same time as well. Let's start off with the US dollar. Well, basically the first quarter is now complete, and really the US dollar didn't perform as well as expected, even though they did have a rate increase, and really it wasn't enough even with just that, as around basically the US dollar lost ground by about 5% against the Japanese yen and the Aussie dollar. The main reasons for this really was a lack of urgency from policymakers to follow up on a March increase and really indicate to the public that a June increase is also on its way. They have failed to do that. Also, the healthcare bill, which was spectacularly not supported by Mr. Trump's party, also didn't give confidence to the market, and it basically paid its price and saw its way through to the US dollar. So as we move into the first week that's coming up right now, of this new quarter, we have a big week for the US dollar. A couple of the highlighting things is, first of all, we have FOMC meeting minutes, and what we are looking for here is to see if the Fed gives us any indication or whether they confirm that they want to go ahead and increase rates further, or if they're going to cool off. Now, of course, if they do cool off on it, this will basically not help the US dollar at all. Okay, so this is one of the key things that we're looking for. And if I just highlight for you what I'm specifically referring to, the minutes are these ones over here. So they happen about 4 o'clock in the morning on Thursday morning for our local time. Okay. The other major, and perhaps the most important piece of data that's due out this week from the US is non-farm payrolls, which is the biggest driver. What we're specifically, or what most economists are specifically looking for, is to see if job growth has slowed down. Of course, if job growth does slow down, and this combined with a non-aggressive FOMC meeting minutes, this could really kill the US dollar, and we could all of a sudden have a total change of direction. So this is non-farm payroll over here, and the employment rates towards the end of the week, which happened around about 10:30 at night time on Friday night. So they're the big things that are coming from the US. If we move along and have a look at the GBP, we have manufacturing PMI, we have services PMI, and we have production numbers, which are the big things for the GBP. Now, for the week that's just gone by, as we all know, the British government has now triggered Article 50. The EU did respond, and essentially they agreed to give the UK a 1 year after they leave. Now, it's important, it's not from now, it's from after they officially leave, to work on a trade deal if they settle their financial commitments. So in all, the UK financial markets acted quite orderly, and we didn't really get like a massive downfall that perhaps we were expecting. This is one of the main reasons that I always still trade my technicals, even though fundamentally I was looking for a big drop. I did, however, get the technical setup that we were looking for, that we saw last Monday, and we were able to take a really good trade out of it, even though our fundamentals didn't come through for us. So that's the GBP. One other point of comment that I will make here is Scotland has also now asked for a referendum whether they want to exit the EU as well. Okay, now the last, I guess, significant news for us is for the Aussie dollar. We have, of course, the first Tuesday of the month is when the RBA makes its rate announcements. Nobody really thinks that they're going to change interest rates, but the statement is of particular importance just to see what they're thinking. And we all know that that we want a weaker dollar. The dollar right now is trading at about 75. It had a relatively strong week against most major currencies. Well, actually, it had a neutral week. It went up and down, but basically ended up about 50 pips higher than where it started. On the last front, if we have a look at the euro, euro had a really rough week last week, losing around about 200 pips. And although some ECB members started to talk about rate increases, many economists believe that it will be difficult until inflation starts to rise. Okay, so there you have it. That's what's happened. This is what's on our agenda. If I look at all the hot data, probably the most impacted currency this week by data alone is going to be our own Aussie dollar. Okay, so it's the AUD USD. This is the currency that's going to be most impacted by raw data alone. Okay. Alright, now before we do get started into our charts, what I wanted to do is I wanted to give everybody a little bit of a trading challenge update. So I know I can see a lot of faces of people who are in this and they're inside the room. So let me just update you, just see what's happened, how many trades we've triggered, where we're at. Basically I've been tracking two methods. Okay, so just to try and put a little bit of clarity to it so that everybody understands. Method one is simply a straight 2-to-1 reward to risk ratio. So that means I'm happy to risk 1 and to get 2. And until either one of these two scenarios unfolds, I will take 0 action. So I'm either going to get stopped out for 1 or I'm going to make 2. Does that make sense for everybody? Is everybody clear on method 1? What I'm basically saying here? It's very straightforward. No moving of stops, no two targets or anything like that. So here are the numbers for you so that you can all have a look. This is what's happened. So essentially we can see I've been stopped out 1, 2, 3 times. I've been stopped out. I've hit my target 2 times over here. And I currently have 1 trade which is open. Okay, so this trade is still alive. So the net result of everything is, what is the net result? That I am up 250, okay, with 1 complete trade to go. So if this trade turns out to be a winning trade, this number will change to 750. If this trade turns out to be a losing trade, my total will go to 0. Okay, so everybody understands that? We're all clear on that? If anybody has any questions on any trades, just email me, send me a graphical log so that I can see it, otherwise it just makes it too hard for me. But these are the reasons for the trades, these are all the dates, the currencies, etc. and the results. The other method that I'm tracking is method 2. What I'm doing here is I'm having 2 targets. My first target is at the 1-to-1 point. So basically when I reach the 1-to-1 point, I will close out half of the trade, and at the same time I've been moving my stop to break even, and then basically I will wait for either to get stopped out for 0 on the second half of the trade or to make the full 2-to-1 target on the second half of the trade. Does that make sense? Method 2, like I know that I've got a typo here, this should say method 2, and essentially this is T1, T2. We all clear on that? So let me show you the numbers here. Okay, so with this particular method I have closed, I have 1, 2 straight out losing trades, okay, compared to up here where I had 3. Okay, so over there I had 3 full stop outs. Over here I've only had 2 stop outs. this trade over here that gave me a full stop out, the Euro Yen one, over here with this method I actually made 125. So I hit my first target, but you can see over here on my second target I got stopped out, so I got 0 for the second target. So you can see there is a little bit of a difference. Okay, now the last time that I did this, we were more successful with this method up here, in terms of we made more with this method compared to this method down the bottom. Alright, so the net result of method 2 at the moment is we are up plus 500, and this number cannot change because I've got half a trade open here. If this trade was to stop out, basically it means it'll become a 0, so this number cannot change, but it could also add another 250, which will basically make this 750. So as it stands, if that trade actually hits target, both methods will be sitting exactly at 750 if this trade hits full target, and it's well and truly on its way, by the way, so we'll have a look at that when I bring up my charts. Alright, so there you go, that's an update. That's every trade that's taken place so far. I just wanted to show you so that I do get asked questions about it. If you do have any questions, email me. Okay, alright, so let's bring on our charts, and we'll start off with the Aussie dollar, and straight away you can see there's the current, this is the Aussie dollar trade. This level here is my T2 level. Okay, the original trade was triggered from memory, it was these two candles up here that triggered it, and the entries there, the original stop was up here and it's moved down, so we already hit T1, so this was T1, so we already hit that target, and so basically I've moved the stop to the break even, and we're waiting to see if either there's three things can happen here. I can hit this one and both trades will close out. I can go back and hit this one, and on method 2 that trade will close out, but on method 1 I have to actually hit this one for it to stop out fully, for the trade to finish. When I look at this chart right now, I'm really, there's nothing I can do. It's I'm in a trade and I don't have a setup to go in the other direction or anything like that. What I would like to see right now, what I really would like to see, is I want to see this line broken. Okay, let me zoom out a bit, and I really want to see this line broken today or tomorrow. It'd be really, really good. If this candle can just finish like this, then I'm very, very confident that we can go ahead and hit our target. Okay, so this line, I got an eye on it. What could happen is I could end up developing a triangle up here. Okay, so keep an eye on that. Now, if I see that this looks like there's going to be a triangle formation above. Now the reason I like the line is because I've got one touch, I've got two touches, and I'm over here on number 3. Okay, but if I see a really nice inside candle and we break the inside candle towards the upside, what I may do is I'll come back and I will close out this other trade. I will let everybody know, and then I'll put a footnote into my trading challenge trade that I've closed it because I've triggered into the in the other direction. Okay, so sometimes you need to write these things into your trading plan so that you know how to act on it. When you get basically, if you get a setup based on the same time frame in the opposite direction and you're still in on the first trade. Alright, so this is a circumstance that you would generally need to write into your trading plan so that you know exactly what to do. Does that make sense to everybody, what I've basically just said? So essentially what I'm saying is that I'm starting to see that I could have a triangle over here. So I'm very, very interested to see. What I want to happen is I want this to break through, because that'll give me confidence that we're going to hit this target. Okay, and because I'm already short on the trade, this is why I want that to happen. Now, if I notice that I get an inside candle here and tomorrow we break it back in this direction, what I may do is I may close out this trade, so close it out for whatever profit we got, and I'll jump on the trade in the other direction, and that will also be a trading challenge trade as well, because it meets my criteria, which is geometric patterns, price action, channels, etc., etc. Okay, so we all clear on what our Aussie dollar strategy is. Now the beauty, because I'm trading off a daily candle, I can make this decision tomorrow morning. I don't have to make this decision right now. Okay, so when the new candle starts, I'll look at it, and that's when I'll make my decision on this. Okay, alright, so let me carry on. So that's Aussie dollar. Alright, so we've just I've just spotted this triangle, and I'm just curious to see what's going to happen on this perimeter. Euro USD. Let me zoom out a little. Let's see what we can see. Okay, last week I said let's look for some kind of price action to happen over here so we can shoot back up, but as you can see, no price action occurred, so that's the beauty of the method. So let's delete that line out. Now what I'm wanting to do here is, I've got a bit of a rising wedge, I think, or maybe let me have a look. Actually, I've got a channel better than a rising wedge. Alright, so we're in business. Okay, I have a legitimate channel now because I've got 2 touches down the bottom, 2 touches up the top. So there's 2 things that I can look for here. The most obvious, and the one that I really want, is I actually want this to come down to this level here, and from there I want to try and hit it back up. Okay, if these 2 candles become an inside candle tomorrow, alright, if they become an inside candle tomorrow, do you think are we allowed to trade off that, guys? Yes or no? Okay, most people are saying no, but one person is saying yes. Now, if I removed the channel, am I not in a trend? Are the moving averages not crossed over? That high is higher than that high. This low is higher than this low. So in theory, I am in a trend. Is that true? So the only rule I have about trend and channels is, if the channel is going in an upward direction and you're going to try and do the trend trade, make sure it's in the direction of the channel. Okay, so realistically tomorrow we could take this trade in that direction on the proviso that this ends up being an inside candle, for example. Okay, if that happens, it would be a legitimate trade. Now, if it had happened over here on these 2 candles as a trend trade in this direction, that's in the opposite direction of the channel, so this one would not be a trade. Okay, so the trade that I would prefer though is the one that I really want. I want this one. This is the one that I'm looking for. This is the one that I want. This one here I don't like as much because I naturally prefer channels, parallel lines, geometric patterns. They're my number 1 preferred. Okay, they seem to have a higher probability, so that's what I'm looking for. Alright, so there you have it, Euro USD. Just a couple of questions has just popped up. Give me one moment, let me read a couple of them. Okay, I've just made a note. Someone's asking me something about the Euro Swiss. I'll have a look at it at the end of the class. Okay, so I just made a note for myself. Okay, let's move on. GBP USD. Okay, let's zoom out a bit. Let's look at this. Okay, so last week I was really wanting to sell the GBP USD, and I tried so hard that I even started to find other lines like this, and we took the body engulfing, was it that one? Oh, where was it? Yes, it was here, but what I also did was I stepped into a 4-hour chart to actually to get it correctly, and it became that trade there. Okay, it was a full engulfing, and it went down and then up, and then just basically shot down and gave us everything that we wanted. So that was a really, really nice break, and that's an example of where fundamentally I really wanted to sell. I just had to look for an excuse to find it. So, but even whatever excuse that I found, I still made sure that it met my rules in terms of price action and the method that I was looking to execute on. Okay, so when I look at this now, I'm going to keep this line, and I want to add in this line as well. I've stretched it out. I'm not paying too much attention to this point, but I am to this one. So I'm going to count that as 1 point and 2 points. So I just wanted to see if it matched up. It did. So let me just go back. I don't really care too much about that one. But can everybody see that this is looking like a really nice converging triangle? Okay. So this week I don't have a bias towards selling it or buying it. This week I'm just going to straight out look for technicals, and let's see if we can find something within. Okay, so at the moment I wouldn't be trend trade, even though the moving averages have crossed over, wouldn't be trend trading because this high has not broken that high. Alright, so this one's clear. This one's clearly a converging triangle. We can clearly see it. So what I would be more than likely expecting is something here to give me an opportunity to go back down. Okay, so that's what I'm going to be looking out for. So we should flag this and highlight it to ourselves on this chart that possibly the best opportunity may be a sell. I don't think we'll get it out of today's candle, so possibly I think so tomorrow, Wednesday might be the first opportunity that we get at this one. Okay, now for those of you who want to trigger extra trades, if we're on this line is definitely a legitimate line, what you can do is you can drop down one time zone into a 4-hour to try and find the price action if you're really trying to get the trade away. I don't have that urge this week, so I'm just going to stay on my daily chart and see if I can pick it up that way. Alright, so that's my GBP USD for this week. Let's have a look at the US yen. Okay, so this floor level has clearly been broken, and we were looking to see if we can pull back into it and get some kind of price action. This candle formation has not given it to us. It's a shame because I really like a sell on this week, but I don't have it. I don't have what I'm looking for, so let me get rid of this line. Okay, so what I have to wait for now, this candle's even come too low as well, so we may need to wait for 3 candles, see if we can get something set up over there, and then get an opportunity to sell into this particular setup. Okay, so the way it stands right now, I can't justify a sell, even though my instincts tell me that I want to. I can't justify it, so I'm not going to trade it. Alright, so I need to wait at least, I think, depending on today's candle. If today's candle makes a higher high over here, it'll be almost like a double fractal candle because it's traded in a wider range. I don't know if we can get that. Let's just wait and see what candles pop up at us tomorrow and the day after. Okay, so just keep an eye on it, but at the moment it's not set. We're looking for it, but it's just not there for us. Let me have one quick look at something else. Okay, I like this channel. I'm just going to leave it there. I can't do anything with it right now, but I just want to track it. Okay, so it's a shame that these two candles don't give me what I'm looking for, because otherwise I would be selling right now. If this was an engulfing or a body engulfing or an inside or anything like that, I would be on this right now, but unfortunately it's not, so we don't force the issue and we walk away from it. Okay, so leave those parallel lines on the chart. I like them. Let's see what develops. Let's move on. What's this? Euro yen. I'm looking. Okay, I'm going to leave that line there. I like that one. I've got 4 touches up the top. Instantly, I want to look for this. Now, can I trade off this level? Let's pretend that this current candle turns out to be an inside candle. Okay, let's pretend that it becomes an inside candle. Can I trade in that direction? Yes or no? What do we think? Okay. The answer is I could, provided that the price action was correct, but it would be an aggressive trade. And the reason why it would be an aggressive trade, let's draw it out. Let me show you, because this is a good opportunity to learn something. I've just zoomed in, that's all I've done. Let's pretend that the candle's finished exactly, or let me just draw it a little bit. Let's pretend that the green candle finished like this with a little wick over there. Okay, so that would be classified as an inside candle. We would put our pen in order over here. Okay, and then let's say that tomorrow's candle breaks that and then ends up looking like a candle like this. We get stopped out, okay, and then we get more candles down here and it does something else. When you go back and you look at that chart, you can see that now this line that we drew would technically be in the incorrect place, okay, because this point here is really not the bottom at all, and what you should have done is drawn the line like this, and probably you might have like a parallel set of parallel lines over here. Okay, now the problem is that you don't know that on the second touch, because we don't know if this is the actual bottom right now. Now price action can help us, because if we do get price action and then we break into the other direction, it's an indicator that it could possibly go this way, but it's not confirmed. Alright, so the second touch always is the aggressive touch. Alright, so if we do get an inside candle there and you want to take that trade, I don't mind that you do. But what may happen is it actually turns out to go lower, and then what you'll have to do is adjust this bottom line to suit, and what may happen is we may actually end up with parallel lines. Okay, my gut feeling is that we're going to end up with parallel lines. Alright, and the trade will really, what we're looking for is over there. If they in fact are parallel lines on the second touch is less aggressive than if I tried to do it on this, because we are at least relying on the fact that they are parallel. Does that make sense to everybody? So right now, if I got this line over here, I'm just going to leave it there and I'm going to check it out. If I do get a really nice candle formation tomorrow, I may be aggressive and try this trade. Okay, but just understand that it is definitely more on the aggressive side rather than the typical where we have the 3 touches, which is, let me go back to that other chart. Which one was it we got 3 touches on? This one here. Okay, see this touch 1 and 2, it's already pushed away, so that's confirmed. So that's definitely a touch. That line is locked in now. And when you look at the top line, this got 1, 2. So this time here, this is the 3rd touch. All you got to do here is basically take the trade. Alright, so that's the difference. This chart is more developed than this one over here. With this, until we see this move away, we can't lock in the bottom line. Okay, does everybody understand that principle? Because it's a very, very important part of geometric type trading and utilizing support and resistance lines. Okay, so there you have it. Alright, so for the euro yen, we're going to wait and just see what happens. But if I get a really nice candle formation, I may take this trade anyway, but I will let you know. Alright, let's see what happens. Kiwi dollar. Okay, I'm just going to mark out this bottom section down here. I don't really want to take any trades in here. I looked for the price actions in there, didn't really get what I was wanting, so I've taken nothing. So what I'm looking for now is I just need to wait for it to fall to this level, and then I'm interested in taking a trade upwards if I get the correct price action on that support level. Okay, so that's the game plan for Kiwi dollar. Pretty simple. There's nothing else really showing on that chart. I'll move on. I'm having a look at the US CAD now. Oh, this chart looks kind of like the inverse of the Kiwi dollar. Okay, this chart's going nowhere right now. I can't really see anything, or at least nothing notable, nothing that I really like. So I'm just gonna skip on the US CAD this week. There's nothing happening. Gold. Okay, I think I put out a call of the day trade for gold last week. We had like a double top there, inside candle. It did shoot down quite a long way. I don't know if it made T1 or not, but it did shoot down quite a long way, and now it's just hovering. And let's see what happens. Let me just zoom out, see if we can see anything. Okay, like I'm still expecting this to fall. Like I think it just definitely I'm not interested in buying until I clear this level. Okay, so unless I clear this level clearly, then I don't want to buy here. And if anything, I'm Like I'm thinking it can get to this level, so, but that's just a hunch, so not based on anything that I'm looking at. This chart's really not got any setups at all. It's a shame. Well, technically we're still in a trade, so we'll leave this one alone. Okay, so in gold, for those of you who trade gold, you should technically be in a trade. So all you're doing right now is you're waiting to see if it falls more on you. Okay, so there you have it. Here's a question on gold. Give me 1 second. Someone's saying on a 4-hour chart there's 2 inside candles after another. What do you think? It's a downtrend? Okay, do I think it's a downtrend or an uptrend? Right now what I think is that until we get out of this area, I'm not willing to take a trend based trade. Okay, so that's the first thing. So I either clear the bottom area or the top area, otherwise I am not interested in trend trading, because right now what I can see is possible congestion. Alright, so in here there's no trend trade. So that's the first part of the question. The second part, 4-hour chart, let me see it. So if I was trading a 4-hour chart, okay, strictly just, and I had not seen the daily chart, I'm still in that congestion. What I would want to do is I'd want to clear this level and then hit the trade over there for the trend trade. Okay, so but this level is still too close to that, so I can't. We're still. I wouldn't trade off these two. That's the question that was being asked. Definitely, I would not trade off those two. You're right in the center of the congestion, and your moving averages are getting very, very close together. Okay, so that's a definitely off these. The question was, could I trade off these inside candles over here? This is a no. Okay. Alright, so let me go back to my daily. Let me get rid of that, and I'll leave this one alone for next week. WTI, let's have a look. That's 4 solid candles in one direction. Oh, we just missed that. I think I had that marked 2 weeks ago or last week. I don't remember. I had this bottom line on this chart. It's drifted away from the line already, so I can't really do anything on this one. It's a shame. Alright, WTI, there's nothing there also. Alright, let me go back and review what we've seen, what we've done. Any questions, please type them in right now, and I'll answer the questions that I have not answered so far. Okay, Aussie dollar, we're still in a trade, so we're hoping we can break this line so that it helps us towards our second target. Euro USD, we've just spotted a set of parallel lines, channel, and we're going to wait to see if we can head towards the other side. However, we will keep an eye on tomorrow. If we get an inside candle off these two, we could possibly take a trend-based trade in that direction. GBP USD, we are getting close to the fringe of a converging triangle, which basically means we're looking for something to allow us to trade in this direction. US yen, we're in the middle of a channel heading down, and we've got to wait till we get to the fringes. Okay, so there's just nothing on right now. Euro yen, we could possibly be at the bottom of a convergent triangle. We don't know if we can lock it in or not. We'll have a look at the candle formations tomorrow. We can make a decision, or we can just skip it because it's technically only the second touch. Okay, Kiwi dollar, we need to wait to come back down to this support level. US CAD, we got nothing there. Gold, we're currently in a trade in a short direction, so we'll just got to wait that one out. And oil, we have nothing. Okay, all right. There was a question on the Euro Swiss. Let me have a quick look at the Euro Swiss. I think the question was on a 4-hour chart. Let me read the question now. I've got to go back one moment. Okay, I think last week I sent out a Euro Swiss as a call of the day. There we can chart of the day, sorry. So we can see there's a floor there. The trade that I had sent out was these ones, these two here, I believe, and they hit target. Okay, so they definitely hit target. The question asked now is, we're getting we just got another inside candle there. Can we hit it? Can we go again? Can we not? What do we think? Let's just ask the room. What do we think? That's what it looks like. It's a 4-hour chart zoomed out. Will it go again? Okay, so a lot of you don't seem to have an opinion on this one, or are not sure. Don't worry about what currency pair or what time frame. Just look at it from a chart point of view. A chart is a chart. Okay. The only thing I don't like about this chart is that the last bump up, this one, which we traded, okay, we hit this one. Basically, it didn't kick on and continue to go. It just got shot down back immediately. Okay, see the long wick on this one. It just got shot down back immediately and came back hard with a big red candle. And now the market's making its mind up whether it's going to break down or whether there are enough buyers to push it back up. So for that reason, I'm just going to walk away from it. Okay? Plus, it's a currency pair that I don't really like, so for me it's easy. So sometimes the answer is as simple as, well, I don't trade that pair, so I don't have to make a decision. I'll walk away from it. Okay? So there's that's the first question. Let me go back, read a couple more other questions. Willie, you asked a question about an engulfing green candle. Can you just give me the currency pair again? Because I missed that question and I don't know what currency pair we're talking about. If you can just type it in, thank you. Gold question I answered. GBP CHF. Give me 1 second. GBP CHF. Okay, let's have a look. So there's a couple of inside candles over here. So the question being asked is, can I trade off that 4-hour GBP CHF? Well, let's zoom out. Let's have a look. Is that level, is there anything happening? What do we think? Let me just draw some straight lines so everybody can see better. Oh, don't like that line. What do we think, guys? I'll zoom in a second. There's an inside candle right there. Is this line a good enough line for me to sell? If everybody could give me an opinion, that would be great. Okay. Good. Everybody's committed to an answer now. I can tell you that 70% of you said no, and that is the correct answer. It's not a good enough level. Like, look, this is just, that's not support. That's just, it's a double hump. It's gone through. This is not support. This, yes. This, yes. Over here, but it's not a good enough level to trade that one. Okay, so I'm going to say no. Another question. Give me 1 second. Someone's asking me, can I explain the indicator at the bottom of my screen? I'm going to say right now, what indicator? It's a CCI. I don't use it at all. It's just sitting on the bottom of my screen. It has zero relevance to any of the analysis that I've done today. CCI, there's a strategy that I use. It's called the T-Chaser. And the CCI is used for that to help to determine strength of trend. Okay, so if you have a look at that strategy, it's used in that. But for what I'm doing on Mondays, this is just pure technical, sort of traditional price action trading. So I'm not using it at all. Okay, but it is a CCI. Let me see. Okay, 1 second. I've got another question here. Actually, that's it. I've covered all the questions. Anybody got anything else that you'd like to add, ask while you've got me here? I'm more than happy to take a moment and assist where I can. Question being asked, where can I get an average daily range from? Tim, do you mean as an indicator or just where to get the information? While you answer, I'll answer another question. Someone's asking how to find congested signals. Okay, look, a really good clue is when your moving averages start to get really close together, okay, and you're not making higher highs or lower lows. So just look at the fractals. Like, look through this little section here, you can see that it's almost like a straight line. So basically this little section here is congestion. Okay, you look here, there's a little bit of congestion here. Let me just pick out any random chart. Let me just scroll back in time a little bit, and just show you. I'll just pick a bit now. See over here, the fractals keep going lower. So this obviously is trend. All right, the moving averages are far apart. If you look over through this section here, the moving averages cross. They get very close. They cross again. The fractals are kind of scattered. This is congestion. Okay, so congestion is basically when we have, like, two key levels and the market is trading inside of it. So this is what it will look like. Okay, this is like a drawn out really pretty, but this is what congestion would typically look like for you. Okay. Someone's asked, okay, the daily range question, just the levels. Look, just if you Google daily range, there's many websites that will basically print them and have them there. Whatever the daily range is, you can probably use it for about a week, 2 weeks, and then just check again to see if they've changed. Let me see if I can find an indicator. I believe I had one, a daily range indicator. all it does is it just looks at a given period, like you might say the last 60 days, and averages out the daily range for those 60 days. Okay, but if you just Google daily range, you're going to find that there's quite a few that say it. One of Rav is saying if you have a look at Action Forex or something, they post it over there as well. But just Google, you'll find something. Okay. Another question. What is my long-term view of over the next, say, 2 to 3 weeks? Article 50 on the Brexit situation, GBP USD. Okay, interesting question. Before I answer the question, these are the kind of questions that I don't really care if I'm correct or incorrect on it, because I'll still only trade what I physically see. Okay, so that's my disclaimer. So I don't claim to be an analyst. I analyze the market so that I can trade it. What I can clearly see on the GBP is this. Let me just zoom. We can clearly as daylight see that we're in a range. Okay, for sure. The range is there. Now, Article 50 basically is not good news for the economy. So fundamentally, we could see a break in this direction. It's been defying it so far. What I think, okay, from a technical point of view, as soon as we leave either direction, that one or that one, we could have a lot of momentum and continue with that move. So there you go. That's the best that I tried to answer that question. Does that make sense? Euro AUD, what do I think? Let me have a look. Where is my Euro AUD? Got to find it first. I like this support line here. I'm liking this level. It's swinging quite hard, like it's swinging big swings. From a technical point of view, there's no trade setups right now, okay? But I do like this line, so I would try and trade off this line, possibly on the next swing up. These aren't parallel. Can I get parallel lines? Give me one sec. Can I make them fit? Okay, I would try and trade off that. Okay, there you go. Okay, another question. One moment while I read it. Question being asked about anything you should look out for between 4-hour charts and daily charts. Well, if you're trading price action as your method, or whatever method you're trading, okay, your method that you're trading, the trigger will be based on the candle finishing. So if you're trading a 4-hour candle, you've got to technically look at your charts every 4 hours. So that means when the last candle, you might catch one at midnight. So unless you wake up at 4 a.m. to catch the next one, you're going to miss a candle. Alright, and if you miss a candle, well then it may affect the trading philosophy or the trading style. The advantage of the daily is that as long as I look at the same time every morning, I don't actually miss a candle. So there you have it. Okay. Other than that, 4-hour is still okay. It's not too small for this particular method. You should be okay. Your stops will be a little bit smaller in distance, but the risk, of course, will still be whatever you decide to risk. All right. Someone's asking me what drawing pen I use. I think it's called Epic Pen. Okay. Alright guys, I think that will wrap it up for today. I hope you all have a fantastic trading week. Let me put back up for you this is the highlights of the week. Take note, they're in my local time, Australian Eastern Standard Time, Sydney time. Okay. I hope you all have a great week. If you have any questions, please feel free to get in contact with us. Follow me on Twitter, ChatFX. Listen to the daily call if you can. I try to find the chart for us every day to look at, to learn from, to possibly trade from. That's up to yourself. But I hope you all have a fantastic week. I will speak to you next week, and of course, unless I speak to you every day via the daily call. Bye for now.